Hey there, everyone, and welcome into today's session, a rules-based approach. I'm Tim Michaelides. I'm joined here by Karo.
Yes, thank you very much. It's good to be here. It's good to run these kind of sessions because ultimately, even though we're obviously showcasing our approach to the market to some degree, it's good for you and I to kind of get back to basics and, look at the market in a more simplistic fashion sometimes, right?
Absolutely. So, the idea of these webcasts is really just to show you guys a bit of an approach, right? I think we sort of feel, especially newer traders, are a bit haphazard if they don't come in and learn some rules and things like that. So what we want to demonstrate through these webcasts is, there is an approach that professional traders use.
Yep.
It's based on various different types of analysis, but, a lot of different traders have different approaches, but all traders, real traders, I believe, have a approach.
Absolutely. And, sometimes that approach can be pretty loose. Sometimes it can be really rigorous, where you really need the stars to align. But I think, and we'll get into it in a moment, but I think the important thing is to really understand the reasons for what you're doing, right? Because sometimes you can just hit the buy or sell button or pick a stock based on not a lot of analysis. Or you think that analysis is sound, but then you change it next time. And yeah, it's good to have some structure, basically.
Structure and consistency is the key. Quick housekeeping, guys. Q&A box is there. Please use it. Ask as many questions as you can. This is a live session. We do them live for a reason. So if there's something that you want us to clear up, or if you got any questions about the market that you want us to quickly cover, please take the opportunity to do so.
Yep. And we've got, this is the first of a two-part webinar. So this is obviously part one, where we're going to go through the rules that we like to use, give you a bit of structure. And then part two, we will look at applying it in the live market. Correct. So we're going to be doing that next Friday, the 15th of July at 1 p.m. Make sure that you put that in your calendars, you lock it out, because everything that we'll be going today, you'll actually be seeing a practical example, and we might find some trades that we can trade. In addition to that, what I was going to say, I've lost it now. But anyway, we should probably just quickly remind everyone that any advice contained in this presentation is general only, so it's not tailored to your personal circumstances, and you therefore need to decide for yourself as to whether it's appropriate to you. I just remember what I was going to say. Because of the second part webinar, if there's any stocks that you want us to go through in the second part, and you want us to apply our analysis to it and give you a view, I would say short to medium term view, just type them in the chat box and we'll get to it next week. We'll save them, we'll write it down in a notepad, and we'll look at it then.
Absolutely. Even if we have a bit of time today, we can scratch on them.
We'll see how we go. Well, we plan for this to be about roughly an hour, but we can go a bit over time.
Yep. All right.
So we always kind of try to boil things down and be reductive to a really kind of simple point, right? Where we say, if you want to be good at trading, you need to be good at three things. Easier said than done. But you need to be good at picking direction. So you need to be able to speculate on the short-term direction of a stock or a security. You need to be able to pick the appropriate strategy and plan for that effectively. And then you need to have good risk management rules in place so that you obviously don't give away all your profits, you limit your losses, you manage your capital properly, when you're getting in and out, that type of thing as well. And what binds them all together is a set of trading rules. Right. So that's the context of how you should learn things. Right. It's if you come along and do education with us, that's how we'll teach you. So we'll teach you those three fundamental things that we think represent kind of the core pillars of trading. And we'll teach it to you in the context of a step-by-step trading system or a set of trading rules. Now, if you already have some education or you don't need an education or you're looking at other companies for education, just make sure that by the end of it, you've got a set of sound rules. And that's, I think, again, just to reiterate, that's what we're really focusing on here.
Yeah, and that's the big thing. We've had plenty of experienced traders come to us and actually do the course, know 3/4 of what's in the course, but got a lot from it because they actually got the trading rules and taught the trading rules. And they had us as advisors and educators there helping them stay disciplined to those rules.
Yeah, I think it's one thing to have those rules. It's another thing to have the discipline to stick to them. And it's good to have someone to keep you in check, which is why a lot of our workshops, a lot of our education, and even just being a client of ours is really focused on giving you that support. And part of that is about, potentially giving you a bit of tough love and trying to keep you on track with following your system.
That's it.
Yeah. So in terms of rules, what they allow you to do, and we've kind of touched on a lot of it, but we've got a couple of slides here that we like to run through fairly on a typical basis. There's a lot of information out there, right? There's a lot going on in the market. I think if you're tuning into this webcast, it's because you're probably wondering what's going on in the market. There's other webcasts that we've run. There's other videos on our YouTube page that actually talks about that. So you can go watch those later if you want. But ultimately, the idea is to kind of grab all that stuff that's out there, all that information, and to put it through a bit of a meat grinder, right? So that you get the sausage at the end of the day, right? So that you can take all that information and process it in a rules-based system.
I love this slide. This is one of my favorite slides we've ever come up with. Like,
I think
the Wolf of Wall Street up there. I love it. It's great.
You've got Biden, you've got Putin, you've got Powell, you've got some big heavy hitters there. Politics, Rona, everything basically. And
it's just so fitting though, guys, if you really think about this concept for a second, right? The human behavior and the sentiment in the market's crazy, and things whip around, and to the uneducated eye that doesn't know any technical analysis or doesn't have any rules, it kind of looks impossible almost to trade, right? At times. Now, having a good set of rules, it really does grind it down into a tradable way and a tradable approach where it's less stressful. You know what you're doing. You know when you're getting in. You know when you're getting out. You're taking all of that guesswork out of it, and you're wiping away all of this crazy media, information that gets put out there, the highs and the lows of people's sentiment out there, and you're just trading the market and what the market's telling you to do next.
And look, it's with all these things, it's easier said than done. Like, this doesn't happen overnight. And like I said, it's good for Tim and I and the other advisors to get back to basics and remind ourselves of this, because in your day-to-day life, it's easy to get caught up. And trading is mostly psychology. And if that doesn't resonate with you now, it will once you get experience. It's all about psychology, and having a set of trading rules is about kind of managing that ultimately, right? As much as it's about having a system, it's about, as you said, keeping you disciplined, reduce that stress, simplifies decisions. Funnily enough, they're all there on the slides. And just to make sure that, when you are feeling a little bit overwhelmed, you have something to fall back on, I guess, as well. So
Absolutely.
I think since we started the webcast, we've really kind of drilled home the idea of having a set of trading rules.
Yeah.
And if that's the only thing you take away from this webcast, at least you'll have taken away probably the most important thing.
Absolutely most important.
Yeah.
Agree with that. Want me to take this one?
Yeah, why not?
All right. So there's two main forms of analysis that people deploy on the market: technical and fundamental. Okay. Now, technical analysis really involves looking at price charts, looking at data, looking at patterns, use different types of indicators and oscillators and things like that. You probably don't know what that means, but we'll run through a little bit of that as we go. But basically, you're doing most of the job on the chart itself and looking at historical prices and looking for patterns. Okay. Fundamental analysis is more looking at balance sheet data, economic conditions, is central banks lifting rates, dropping rates, what business cycle are we in, what's the likely profit outlook for a company, all that sort of stuff, right? And analysts sit there day in, day out, spitting out all that type of fundamental information.
Oh yeah, it takes a lot of time as well.
Yeah. So it's quite time consuming. Now, the difference between these two analysis when it comes to trading, right, or the usefulness, I should say, trading, we do maybe 90% of our decision making on technical analysis.
Yeah, right? So for short to medium term styles of trading, yeah.
So because we're trying to pick the market short term, what it's going to do tomorrow. Some people use technical analysis for day trading. What it's going to do for the next minute or hour, right?
I actually don't know how else you could.
Yeah, that's it.
You really have to lean on technical analysis for short term, yeah.
So technical analysis is more useful for trading. Fundamental analysis is far more useful for that long-term investment style. Right. So you want to make sure you're buying a good company, don't you? Right. You're going to hold that company for the next 5, 10 years, whatever time frame you're buying in. And you're probably not going to really worry too much about timing. Obviously, buy low, sell high, blah, blah, blah. But fundamentally, you're buying a stock based on that you think that company is going to continue to give good earnings and good dividends and whatever other reasons.
Yeah,
right?
and that, I mean, that goes from say blue chips, where you're buying into a healthy, mature, well-established company, but it also goes into penny stocks and stuff like that, where you can trade them technically in the short term, but if you're buying them, you're probably buying them because you like the company, what they do, the prospects they have, all that type of stuff, right?
Yeah.
And that's more fundamentally driven analysis.
Absolutely.
And it's not about having one or the other, right? As Tim said earlier, we'll probably lean on technical analysis for 90% when it comes to shorter term, but that leaves 10, maybe 15, 20, whatever, for fundamentals and just looking at the health as well.
Yeah.
And equally, as Tim said, with fundamental, your investment horizon might be 5 to 10 years, but you could certainly use technicals to time your entry better, right?
Correct.
So it's not necessarily, they're not mutually exclusive, right?
Absolutely. Like just to sort of hammer that home a bit. So, obviously I run my own portfolio and then also do my trading. Okay. So, if I'm in portfolio mode, I put my portfolio cap on, I'm looking at stocks fundamentally, but I do wait for technicals to line up before I buy in, right? So I do use a bit of both of these analysis types.
Yep.
But when I'm trading, I like to get in, the technicals have to line up. And the only time I sort of lean on my fundamental knowledge is to go, okay, well, if I'm going to trade BHP or Fortescue and I see, iron ore and copper and things like that plummeting, well, I'm not going to go long, am I? Even though the signal might show up technically. So I use that as a bit of a sort of a balancing to go, oh, you know what, I might just give it one more day and just see what's actually going on here.
Yep.
Because sometimes you do get a couple of those little false signals in TA. But I think that's sort of.
Yeah. And Tim actually has different hats. So he's got a hat for fundamental analysis that he puts on. And if I walk into the room, Tim's got this giant cowboy hat that says fundamental analysis on it. And when he's doing technical analysis, most of the time, it's just a simple top hat, just kind of casual wear. Right. I haven't gone that far yet, but maybe one day when I earn it.
I might start running a podcast just on that.
Just with the hats on.
Just with the hats on.
Yeah,
it's
10 gallon. Yeah, that's right. When you then you have your party hat for at the end, right? Which is so obviously today is going to be focused more on technical analysis because we're talking about shorter term trading, right? As we just said. And in terms of if you wanted to boil technical analysis down into kind of basic principles, you would look at trends and counter trends, right? So fairly simple stuff there in terms of just trend analysis, drawing your lines appropriately, then looking at support and resistance levels, looking at technical patterns. So once your lines are drawn on the chart, identifying any patterns that you might see. That comes down to things like triangles, channels, reversals, continuations, flags. You can even have like bar, like morning star, evening star, these types of patterns that you might identify.
There's heaps of patterns out there.
There's a lot.
Technically, guys.
Yeah.
There's heaps out there.
And we really like them. I think we probably lean on patterns as probably one of the better forms of confirmation or confidence,
But we also keep it fairly simple in here. Like, we've got our favorite patterns that we look at, and we don't really venture too far out of that. Like, I have listened to some other technical analysts out there, and they go pretty deep at times, and it can get really conflicting and can get a little bit dangerous in my mind because it stops you actually from making a decision when you look at too many things.
I find that's the same with indicators as well. So after we've looked at entry and exit signals, we confirm with our indicators, and there's a bunch of them. Like I think we like to use Bollinger's stochastics, and we sometimes like to use moving averages as well. But there's MACD, there's Elliott waves, Fibonacci's, there's RSI. I mean, and if you, as Tim said rightly, if you try to kind of do too much all at once, then you get analysis paralysis. You get that kind of conflicting information. And what we need to remember is that because we're speculating, it's all a confidence game, right? It's about building confidence to make a decision.
Correct.
And if you've got too many conflicting things, then you don't have the confidence to make that decision, and you'll just never trade, which is not good if your goal is to trade, right?
You don't want to be paralyzed. You don't want to be sitting there watching the market go against you, and you've got these conflicting indicators that are stopping you from taking action, right? You've got to be able to take action quickly. Same as taking profit, right? You've got to have something that's going to trigger you to go, yep, it's time to take the profit off the table and move on to the next trade. And if you've got too many signals that are just hammering you, you won't take action. So
yeah, for sure.
Keep it simple, right, is what we go after. And our rules, although can be fairly strict at times, are fairly simple. as
Oh yeah,
TA goes.
I think
So,
that especially when it comes to our education and how we like to approach things for beginners or people who kind of need to restructure what they're doing, we always take a simplistic approach and we try to kind of build those foundations. But certainly, there's variation between myself and Tim and Sam and other people on the desk with Ben, and therefore, there's room to change the rules or change what you're doing to suit you better. It's just that you can't do that without experience.
Yeah.
There's no one thing that works, right? There's no silver bullet. It's about finding out what works for you because most of it's psychology. And so you can dip into other types of indicators, you can dip into other types of signals, but you're not going to know what's suitable for you until you gain experience.
correct.
Can't gain experience until you have some foundations to work on.
Correct.
All right, so I think what we'll do now is just run through an example of using some of these principles just to give you kind of a step-by-step process. It'll be fairly basic. Doing the live market.
Yeah, you want to do them?
I was going to show them some slides first.
Okay, we'll do that.
Sorry.
So I've got a couple of screens going on here.
Yes. That's it. It's down the bottom.
Go, found it.
All right. I just want to run through a quick example. I won't take long, and then we can apply it. This is what this is a chart of today. You can see there's a lot going on there. I've got like 8 different lines. I've got 3 squiggly ones. Anyway, there's a lot going on there, right? By the end of it, I want you to understand at least most of that. Okay. So the first thing that we want to do, and again, we're just here to give you a bit of a basic approach. And if you're not doing this, this should immediately help what you're doing, right? If you're doing some of this, then great. Maybe add a few things on. And if you're already doing it, then great work. I guess, you'll get a lot of benefit from the next part of the webcast when we apply it in the live market. So the first part is to identify range and trend, right? We want to draw our trend line in, which is basically a support level with a gradient or with a slope. And essentially what we're doing is we're creating a rule, aren't we? By every time that the stock returns to the uptrend line, it's bouncing higher, isn't it? So what that allows us to do is project that line into the future. If the stock was to return to that line, then we would have some degree of confidence that it was going to hold it because it's done so every other time in the past so far. So we've created a rule where 100% of the time the stock has bounced from it. Does that mean it will continue to bounce from it in the future always? Obviously not, but it's one piece of the puzzle, right? So one analogy that I've always used is that technical analysis is like painting a painting because it's only when you apply all those artistic elements to the canvas do you actually get an image of what's a clear image, right? Right now, we're just applying line. Can we trade based off that? No, but we're starting to form an image and starting to build confidence in making a decision. So the first things first is identify the trend and draw your trend line in. When you're drawing your trend line, make sure that you've got at least 3 touch points for it to be valid, right? And make sure that you're not cutting through too much price data if you can help it, right? Because you want that rule to be solid. The next thing that we want to do is define a bit of a market range if we can. This is not an important step because you can't always do it. But if you can draw, for example, a parallel line here, what you're essentially just showing yourself visually and locking in is that the market, this particular stock, has a defined trading range that it likes to stick in for the moment, right? So if the share price does continue higher from here, then you've got a bit of a ceiling or a resistance level that you can target, right? Because in the past, once again, the share price has stopped there at least 5 times that I can see, right? And turned around so that if you do trade a bullish position on this, and it gets to that line, well, you might want to close the trade because it might start to retreat from that point, right? So again, you're not going to be able to do this with every stock, but it's good to define a kind of market range if you can see one.
Yeah, and obviously just talking about trends a little bit here. There's 3 trends that we're always looking out for: up, down, or sideways, right?
Essentially, yeah.
Your 3 main trends. And with trading, and most people don't realize this, but using a lot of derivative products that we do use, we can trade those 3 directions. Okay, so you can trade the upward movement, you can trade the downward movement, but also using options, you can trade sideways trends as well.
Yeah.
And that's something we'll scratch on next week. But the trend is your friend is what people say.
Yes.
And that really hammers home as a trader because, we can trade all those three directions of trend.
Yeah.
And that's why we sort of start here to establish, okay, which way is the trend at the moment? Can we see a trend and which way is it?
I think, yeah, as Tim said, it's the first place you have to start, right? You've got to start wide, zoom in, and basically identify what the trend is and the market range in the first instance. Next week, as Tim said, we'll go through strategy a bit more, but just, I guess, as a preview, the great thing about being able to trade different market conditions is that when you decide to analyze stocks, you're in a position to analyze it with less of a bias lens, because if your only tool is a hammer, then everything can start to look like a nail. Translating that, if the only strategy you have is buy low, sell high, or if you can only do bullish strategies, then when you analyze stocks, you're really hoping that it's a bullish stock. What you're hoping for is to be able to trade long. Whereas if you know that you can trade bearish strategies as well as sideways ones, then you don't really mind what the stock's doing because you know that you have strategies to suit what it is doing. And so you're a little bit more unbiased in your analysis. The other part, and I don't want to labor the point, the other good thing about being able to trade different market conditions is that opens the door to more trading.
Correct.
And if you're a trader, then you want to have more trading opportunities, right? Especially if income generation is your goal.
And let's face it, if you're an investor, you're probably sitting on, maybe moving a little bit to cash and sitting on the sidelines over the last sort of 2 to 3 months as the market's been moving lower. And you're kind of hamstrung waiting for the market to bottom out and, show you some signs where us traders, we're trading the whole way along, right?
Yeah, for sure. And look, I think that, if you are trading in this type of environment and you don't have bearish or sideways strategies, you're probably playing a bit more of a risky game, right? Because you're trying to fight market momentum.
Trying to fight gravity.
Trying to fight gravity is a good way of putting it. So moving on, we've got the next step, which is to identify key levels of support and resistance. And look, this is not too different to the first step. It's just that support and resistances by our language are more traditionally just horizontal. So we want to draw points where the market has turned around, right? So for example, here, you can see that when the share price has gotten to that particular point, it has turned around at least twice in the past. And so it's good to identify these points where the share price turns around, because if it gets to there in the future, then there's a chance that it happens again, right?
Yep.
So we're just layering another piece of analysis on top, and the image is starting to become clearer.
And then we're looking for breakouts of those levels as well, which can be significant to our analysis. So, yeah.
Absolutely. Absolutely. So as Tim just basically said, we're looking for patterns and breakouts. So in this particular circumstance, a pattern that is quite easily identifiable is this ascending triangle. And it's clear to see why it's called a triangle pattern, because ultimately that resistance level will eventually meet that uptrend line, right, to a point. And that'll force the stock to either break the uptrend line, or it'll force it to break the resistance level. And those breaks are significant to us, right? Just like they're significant to other investors and other traders. So the other type of pattern there would be the ascending channel. But even though there's two patterns in play, the one that's actually immediately concerning us, not concerning, of concern, is the ascending triangle. That's the one that's in play right now that we need to take note of.
Yeah. And we're utilizing this with a few other bits of analysis that we're going to go through in a moment to establish entry signals.
Yeah, which is actually, once again, the next step. There's the breakout there. And now we're on to entry signals, right? So what we want to see when it comes to entry signals, and we're just going to, a bit. What you can see there is that there's some really good buying there, right? There's a lot of different types of entries, and it would take a lot of time to go through them. One simple entry is simply a break of the triangle pattern. If it's breaking higher in the direction of the underlying trend, which it is, so it's breaking upwards and the trend is up, so it wants to continue the trend. And triangles are great continuation patterns, and a breakout of them it says to us that the trend is ready to continue. There's buying coming back into the stock, and it's strengthening the underlying trend as well, which gives us more confidence.
And what we try and do is filter out sort of false breaks by using a bit of bar analysis. And what we've got in front of you here is a bar chart, and you can see each. And we set it at different time frames, right? So, but this is set on a daily time frame. So each one of those bars in front of you is 1 day, basically. And then what the bar tells us is the opening price, the closing price, the high and the low of the day. Okay. Now, what we want to see via that bar is that the buyers have stayed in control of that day. Right. If the buyers lose control by the end of the day, then it kind of sort of suggests maybe that's a false break. And things like that is what we look for entry signals. Is okay. We want to see buying in control. We want to see reasonable volume there with that breakout.
Absolutely. I think and you can look at volume as a way to kind of suss out false breaks. They're not completely avoidable, but there's little things that you can do that can, I guess, mitigate the chance of getting into a false break.
Yeah, absolutely.
So entry signals are super important at the end of the day. And again, there's different types of ones that work in different scenarios. But I think this is probably one of the most simple ones where you get that kind of nice break in the direction of the underlying trend, which is why we chose this example.
And with some of our strategies we use, we're looking for different types of signals on the bar as well.
Oh, absolutely. Yeah.
Which makes part of our rules.
All right. Finally, and this is the last step, and it's really important to understand why this is the last step, is because we find that beginners, even after a bit of experience, can lead their analysis with indicators. I've actually, so I mean, I say this a lot. I say this every time I teach indicators, to always leave them at the end of your analysis. And even after a few months, people will sometimes revert back to leading their analysis with it. And we have to kind of correct that, because they're they're almost like a bit of a cheat sheet. They feel kind of cool because you've got this other little special graph that's telling you information through mathematics and algorithms. And so because they're kind of sexy like that, people, their eyes are kind of just drawn to it, and they automatically want to look at that first. But unfortunately, there's just no replacement for doing everything that we've done so far, which is trends, market range, support and resistance, patterns and entries. Once you've done all of that, then you look at the indicators to help confirm. They're like the cherry on top, the finishing flourishes on the painting.
Yeah. I think people get a little bit lazy at times, and that's why they want to move towards indicators, because it can be a
that's
lazy
exactly right
approach. But in my opinion, anyway. But yeah, I think that nothing beats just getting in there, drawing some trend lines, analyzing, the trend, how it's behaving, making some decisions there before you look at any indicator.
Yeah, and to put a positive spin on it, people might just want to be more efficient, and they jump straight to the indicator and go, oh well. But
that way.
Regardless, these are the stochastics, and this is just one of the indicators that we use. There's a handful of other ones that we like, but I would say these are the most simplistic. The stochastics can be used for looking for overbought and oversold signals. They can be used for momentum, direction, and divergence. Without getting too complicated with it, we'll just focus on one of those things, which is basically that the stochastics are both pointing up, which helps confirm the bullish momentum, and they're both widening, which helps confirm momentum as well, right? If they were narrowing, momentum would be leaving the stock, and then it might be looking to change direction. Again, we can go into it deeper, but there's only so much information we want to teach all at once, right?
Absolutely.
So moving on to another type of indicator, these are the moving averages. I really quite like these. I found that I've lent more on moving averages over the past couple of years. Originally, like you're slowly, again, as you gain experience, you slowly figure out kind of what works for you. And I've really discovered that the moving averages for me are pretty key. Again, I don't want to get too much into it, but essentially, I've got a 50-day, 100-day, and 200-day, and the colors are corresponding there. We're just going to focus on the 50. And you can see every time the share price returns to the 50, it bounces higher. So in this circumstance, the 50 is being used as a pretty key level of support, right? It's just a support that is not horizontal. It's a support that isn't a straight line. Like it's got curvature to it. So it's essentially, and the logic behind it just quickly is that it's the past 50 days, the average price that someone's paid for the stock for the past 50 days. So when the stock returns to it, people go, oh, well, I can get this for a pretty average price, right? As in, I can get it for the same price someone bought it 50 days ago. I can get it when, and if it goes up, then it's like, well, I'm kind of overpaying for it in the past 50 days. I'm kind of, you know what I mean?
Yeah.
So it's a psychological thing where if it returns to it, people see that the stock is on average good, decent value, right? Yeah.
Now, one thing, and this is not some golden rule that's going to work across all stocks and indexes and the rest of it, but these are the 3 averages we tend to have on our chart to look for opportunity like what you're seeing in front of you, where this particular stock, I think this is the index back in the day. Yep, I think this is the index maybe.
I can't remember. I think it's Oz Mineral. I can't remember. No, it's not Oz Minerals.
I'm looking at the price, but it might be even CBA back in the day.
Yeah.
But regardless, you know, in this scenario, it's using the 50-day moving average. In some other charts, it might be using the 200 or the 100. Like, you know, so we have those 3, and typically on a lot of charts, it's using one of those 3 as a level.
Yeah. Look, people use other different ones. I think Jimmy uses the 7 or something, but you know, whatever works for you. And that, by the way, that's also got a golden cross where the 50's crossed over the 200. And if you know about moving averages, you can see that there. And that's another bullish momentum indicator. And as Tim said, it's different for each stock. Just like all your analysis is going to be different for each stock. You're going to see how they interact. And with a bit of experience, you're going to find that easier to read and you'll be more efficient at reading it too.
Correct.
So just to kind of recap what we went through, the first thing we did was we defined our trends and our market range or our trading range. We placed our key levels of support and resistance. Once we've drawn all those lines on the page, patterns, certain types of patterns or patterns, as I've written there, tend to be more obvious. And then we look for breakouts, confirm with entry signals and indicators. And then finally, we might want to just confirm with fundamentals. So we're looking at trading this stock bullish, but is it a stock that's completely overbought? Is it just like ridiculously bad stock? You know what I mean? Like, or is there a report tomorrow? Is there a going ex div in 3 days? Yep. These types of fundamental pieces of information you should be kind of aware of before jumping in.
If you think there's going to be a bit of news that's going to be a massive catalyst to move the market up or down, you don't know which way, it's kind of just like maybe back off a little bit coming into that announcement, or don't trade at all for that
for sure,
stock coming into that announcement, that type of thing.
Yeah, I mean, it may simply even just alter the strategy that you do or the amount of risk that you place on the trade.
Correct.
Yep. That's basically what I wanted to run through in terms of TA.
Cool. Well, let's get across the market. I'm just going to quickly grab this mouse pad. Before, the mouse was jumping around all over the place, and that's much better. Okay. So let's get across. Basically, we're using Iris as a platform, guys, here. Okay. And I'll just reset things up because my colleague's been here.
That's you, yeah.
No, I'm in the wrong one. That's fine. Sorry, guys. Just give me 1 second. We'll re-log in there. My apologies, guys. We're a little bit far away from the screen where we've got it set up. So that's much better. All right. So what I'm going to do is just start off by jumping across to the XJO. This is the top 200 stocks of our market. The reason why we use XJO over all odds is we can actually trade the index, okay, using various different derivatives, okay. 2 of the derivatives we teach in our courses, and we'll talk about this a lot more in the next session, is mini warrants and exchange traded options, ETOs. All right, so I just cleared off all my drawings. Now, anytime I approach a chart, I'm always going to come out and sort of look at it from a 2-year perspective. Okay, they're thereabouts, right? Maybe even a little bit more. What I'm trying to look for is where is the current trend, okay, and you know, just overall behavior, right? So you see, this was the low of COVID through here, and you can see that was the uptrend. You know, there was other little trends in between, but you know, overall, you can see that trend's now broken. So, anything in this time frame now is really not relative to what's happening. So I'm going to start zooming in, get a little bit closer. The trend for a long period of time was actually sideways through here, wasn't it?
Yep.
Right. So, that's going to be important to us through this time frame. So, just now picking some key levels of that overall sideways trend. Okay, so we can see the resistance of that trend was up the top here. Okay, that was actually
The
all-time high as well for our market.
Yep.
And there's a few lower levels, to take note of. Right, back here, obviously that middle part around 7,200 was very, very important, and then towards most of this year, the lower part of that channel ended up being around here at 7,000. But that's changed as well, right? So, just a little bit after the Queen's birthday long weekend, we've gapped down and flown quite a bit lower. So what's the current trend, right? So how do we pick trends, guys? It's about looking at the peaks and the troughs.
That's it.
Okay. So we've got lower peaks and lower troughs now.
Yep.
So the current trend is really through here, and that's down.
Yep.
So what I've done is just gone out far, because sometimes you might have a 2, 3, 4-year trend on a stock, okay? And you want to establish where that is and what's most relative to what's happening in the markets right now, or on the stock right now. So you can see that's kind of a bit of a downtrend, trend line, although it's not 100% confirmed yet. We want to see at least 3 touch points.
Yep.
So whether you call that 2 touch points or not, I don't know. It's a bit sort of not 100% clear for me, but
yeah,
that's kind of the best representation of that trend through there. Then we had a short-term acceleration through here, and what an acceleration! It was about 12% in a week. It's a pretty big move down. And now, so the momentum was down. Now, what's the momentum? It's back to up, kind of slightly through there. Right?
Yeah, it's a fairly meek rally. The other thing that you can do, even though so that downtrend line, as Tim said, is a little bit sketchy, right? Doesn't mean we won't draw it in. It just means that it just means it's not fully confirmed yet. What can you might have to? It's the volume that's getting in the way.
Get rid of the volume on this one.
Still it. Just click it. Double. Yeah,
there we go.
What you can do is, because our market tends to follow the US, you can actually go and look at how the US is trading, and that can kind of help inform what our market's doing as well, in terms of like how you draw your line. So if it just indulge me, do you want to?
I just wanted to cover one more thing here.
Oh, you want to draw the little pen? You haven't got it selected.
Yeah, the mouse is playing up again, unfortunately. It's just jumping around a little bit. There we go. I'm not sure whether we have a little bit too much open on this computer, or whether there's just this mouse battery might be going flat.
Yeah.
But look, what I'm seeing at the moment, guys, just on our market, technically, we're at a sort of key reflection level. Okay, maybe you call this a pivot point.
Yeah.
But around 66 here, you can see the price action, even on the bar each day. It's just a magnet at 66.
Yes,
and
exactly right.
Had almost a whole week hovering at that level.
Yep.
Now, what could that tell us, guys? Well, for me, it tells us indecision. We had this huge sell-off, a little bit of a rebound, but we got now indecision in the market. It's like the market's waiting for something, isn't it?
Yeah. So I the way I put it in my webcast, which I run on every Wednesday, for a while there, it was like trench warfare between the bulls and the bears. Ground was being taken and ground was being given up, but it wasn't really going anywhere. And now it's like all quiet on the Western Front, where nobody wants to kind of do anything. You know what I mean?
Yeah.
It's just kind of really tracking sideways. Yeah.
Now, I could sit here for the next 10 minutes, explain maybe why that's happening fundamentally, but we don't need to.
It's about technicals.
The
right?
technicals are telling us that, right?
Yeah.
So if you know how to read what the chart's telling you, well, the chart's already telling me the market's waiting for something.
Yep.
There's uncertainty between the bulls and the bears.
Yep.
And it's going to require a catalyst to really drive that next move.
It could be that the catalyst drives it and that sets a new trend. It could be a one-day pop, though, right? It could just break lower and then go sideways again. The market can be very fickle and very non-committal when it's indecisive like this.
But then all of a sudden it makes a decision, whether it be something actually happens or whether somebody just drives it, or a group of people have bought that day, drives it. People see the same technical signals we're seeing.
Yeah, that's right. Yeah.
Everybody gets on board and just starts
And then
driving
that creates
that
more
direction.
momentum. Yeah.
No, we don't always have a reason behind a move. And although some of the media outlets like to always assign a reason, there's not always a reason, guys, for a move, right? Don't overcomplicate it.
And also, I mean, you're never actually going to know why people hit the buy and sell. You would have to interview everyone who did so. And so you all you can do is kind of speculate. And the media outlets need to sell papers, rightly so, by the way. And so they need to write something other than, hey, look, it could be this, right? They need to have more conviction, and they like their clickbait articles and all that type of stuff.
They don't get caught up too much in that. And that's why we'd like to sort of keep it simple and technicals and just keep it strict there from a trading perspective. But yeah, so got like the other chart, like Karo mentioned before, is the S&P 500 US. So that's the main US index.
Yeah, that's when someone says the US market, that's what we call the US market, right? Because the NASDAQ is mainly tech, and the Dow is like just a random top 30 companies. It's not even top 30, it's just big 30 companies. So when we talk about the US market, we like to look at the S&P 500. And you can see, and this is what I was trying to point out before, that the downtrend line in the US is much more pronounced. It's got, I would say, more touch points, and it's just clearer. There is a little bit of iffiness for me, at least. I don't know whether to draw it like how Tim's got it or to pick up the recent peak. That's yet to be seen as well. And that reflects a little bit of the indecision in our market too. Right. But if you're unsure about how the line is on our market, then you can go and look at the S&P 500 and see what the lines are on their market to kind of give you a little bit of guidance, right? Because we often do move in some form of unison.
Correct. Yeah, so US is kind of doing a similar thing to what we are, but instead, you know, they found a level around here at 3,600 or 30. Sorry. Yeah.
What's the question? Sorry.
What's that level?
38.45.
38. Sorry, yeah, we found a level sort of approximately around 38 here. And you can see the whole week the US market has struggled to really lift off or fall from that level. So they're also just sort of in that waiting consolidation period where, you know, all of us are just sitting here trying to wait for a direction, aren't we?
Yeah, I mean, you can trade your sideways strategies, but we've just kind of I haven't had the confidence to recommend them and people have though. And if you've got a little bit more capital and you can set wider ranges and stuff like that, then it's okay. But doing a sideways trade in this environment, for me, again, I just don't have a lot of confidence in that, because we are seeing that kind of sideways movement, notch down, sideways movement, notch down. And if we enter a sideways trade, the last thing we want is that another notch down. So we're just waiting for a little bit of confirmation, I suppose.
Correct.
We ran a webcast actually last time, and we talked about what to look for when it comes to picking the bottom. I ran a YouTube video on that as well a week or 2 weeks ago, maybe 3. It's on the YouTube page. Go check it out. I talk about the type of things that you want to kind of see to help predict the bottom, like reversal signals, break of the trends, and things like that. And I used a couple of past examples using the moving averages as well to kind of indicate that. And so that's another reason why I think it's kind of hard to have confidence in this market, because it's hard to tell whether this is the bottom because you haven't seen those indications yet. You are seeing sideways movement, but that could be, that could change on a dime, right? In this particular market environment when you've got fundamental talks around inflation, all that type of stuff.
Yeah, and just sort of give an example of a reversal pattern. There was a massive one up the top here on the US market. Okay, and it's actually kind of rare to see a head and shoulders pattern this perfect on an index. You rarely see it.
Yeah.
But look at that big roaring uptrend since COVID. That was your little COVID dip. It wasn't a dip back then, but it looks like a dip now compared to this uptrend.
Very American uptrend, just goes for it,
But basically a head and shoulders pattern, guys. You got a head up here, and you can go do some Googling and look, go listen to Karo's video.
I talk about this.
Like, on our YouTube page. Go have a look. But that's your head. You got your left shoulder, your right shoulder, and it broke here.
And then retested, which is also a confirmation of the signal. It's it is literally picture perfect. It's one of the best examples. Like I'll be using this as an example for like years.
Yeah, absolutely.
It's honestly one of the greatest examples I've seen of a head and shoulders especially on an index.
Yep.
the flagship index, the US. Like,
Absolutely. And then you want your neckline from the top of the head down to the bottom support of the pattern. You can transfer that to the bottom here to give yourself a target, and that target comes in around 3,500.
Yeah, 35 to 36. I'd say you got to give yourself a bit of space, because being precise on indexes is not a good idea. You got to be super rough with your targets, I think. And don't be disappointed if it misses it by 50 points or something. You've pretty much completed it. If you try to hold out for that 50, you could be in some pain.
So we're at our first target, guys. Really. So we're sitting here going, well, this could be the bottom, right? This is probably the first time in this whole downtrend I'm sort of saying this could be the bottom, and what we're looking for is just more evidence of that, right?
Basically,
so just as much as this signal told us that it was a reversal of the uptrend, we're now looking for a reversal pattern down here to say this downtrend is going to reverse and head back higher again.
Spot on.
So,
yeah, it's about waiting for signals. We're not going to force it.
No.
We don't care. Like, it'd be great if it happened sooner rather than later, right? Because then we can start making some more accurate decisions. But we don't mind. I mean, at the end of the day, the market's going to do what it wants to do. Our job is to sit here and analyze it unbiasedly and effectively, so that we can help our clients make better decisions.
Correct. So with this, we're kind of looking at COVID was a V-shaped recovery, right? There wasn't much of a reversal signal down there.
That's right.
It just fell. Well, it took about a month and a half to wipe off about 40% of the market.
Yep.
And for various reasons I'm not going to go into now, the market just rocketed back up and kept going.
And I think that's unique. I think that V-shaped recovery was unique because the fall itself was unique. When we're seeing a sell-off for normal reasons.
Correct.
Economic data, inflation, monetary policy, the foreign exchange, all these things are standard reasons for markets to move. And so they play out normally, right? COVID was completely ridiculously unique, right? Viruses that kill people that we haven't seen in 100 years, all that type of stuff, lockdowns, blah, blah, blah. The fall was unique and the rally was unique. So it's not something you can't refer back. If we have another virus, by the way, then we can go back and refer to COVID. Correct. Right? We could look at the chart and go, what happened last time? Correct. But until then, it's not really much, I don't think, that you can look at unless something else weird happens.
So we suspect this time around it's going to be more of a W, or you're going to see triple bottom, double bottom,
head and shoulders.
There's going to be some volatility down here for 2, 3, 4, 5. I'm not going to call how many months that's going to take for this to bottom, because it could take a while. It could happen quickly, right?
I think there's at least another month.
But nonetheless, we're going to see some volatility down here in the markets whip around at a particular level for a while before it actually officially bottoms. And we're going to go, yep, we're confident we're at the bottom now. Let's start increasing our exposure again.
Yep. I mean, in the short term, though, the market will break because we're at the point of that pennant. It just might not break with any kind of momentum.
Yeah.
It might just be a bit of a fizzle. It'll go up a little bit and then it'll just die again.
Yeah. All right, how have we got? We've got a question up on the screen. Can you advise of recommended any brokers for a newbie day trader based in New Zealand?
Yeah, I'll talk about that at the end, I think. But yeah. It's good to see our cousins across the water online.
All right, so look, let's probably cover a few more stocks maybe, and then we'll just technically. I think at the moment, BHP is an important one to sort of look at, right? As I said before, I always want to start out far, and you can see I'm going more than 2 years now, aren't I? Right? I'm going more than 2 years. Just I want to see what the overall trend is and when that trend began. Right?
Yeah, exactly.
So you see downtrended and started up trending through here, and that's why I've sort of gone out that far. And you see you had a bit of an accelerated trend here, pull back. It's gone again, pull back. So I've got a nice sort of longer term trend line just to even out how things are behaving in the long term.
Yeah.
And as I come in closer, you can start to see that it's struggled. It's struggled to get through that 48 level up here multiple times. So that's 1, 2, 3. So there's a key level of resistance up there.
I do want to just quickly interject in
Yep.
regards to the longer term trends. It's important to understand that they themselves are going to be a little bit rough, and you can't be too precise with them as well.
Mhm.
So the longer term, the longer you go out with your technical analysis, the more rough it is, because technical analysis again is more of a short term analysis tool. So if you're looking, I mean, this is like a 6-year chart, and it's good to draw that trend line in, but you might adjust it a little bit to go up a little bit or down a little bit, and that'll become more apparent as the share price reaches it.
Correct.
Right. So I just wanted to kind of clarify there. Just because Tim's drawn the line exactly like that doesn't mean he might not adjust it a little bit later to be a little bit higher, which is probably what I would do,
Yep.
or maybe even a bit lower if it ends up being like that.
Yep.
You can't be sold on it, but it's good to have it there because eventually the share price might interact with it. And in fairness, it probably will.
Very much could, the way it's behaving at the moment.
Yeah.
So
sorry, I just
no, all good, mate. Sorry, I only stopped because my mouse has stopped. It is really playing up now.
I think it's the distance to the dongle.
Just so close. There we go. We're back in action. Sorry about that, guys. It's really a bit strange the way it's behaving. All right, so it keeps topping out at 47, but in recent times, it's had this fantastic support level through here at 39. And, I've been trading off this level really since back here. Every
It was
time
super key.
BHP's been coming back here, I've been trading off that level.
Yeah, it was a heroic defense line. Yeah,
definitely, except for this time around.
Yeah, right. Yeah.
So this is a reason why I wanted to show this one, guys, is this is what technical analysis and trading is about, right? So each time it came down to this level, I had to make a decision. Was I going to get in or was I not going to get in? And I was looking for certain price action at that level to determine that.
Mhm.
And each time it came down and I got in, there was actually a bit of an entry signal. Okay, so
Yes.
you can see it there. Right, that was the entry signal.
Every time there was an entry signal. I mean, even
this one here was a bit scattered. That one was a bit harder to get in on.
That's true, but yeah,
here was perfect. Here was perfect.
Is
So
that, yeah.
almost each time it gave us a nice little entry signal off this level.
Yeah.
Now, this time around, it didn't quite give us that. It tried to, and it failed through into the afternoon session, right into the late session.
Yeah, it was like
I remember watching it.
We were watching it. Yeah,
we were watching it very closely.
It was like 3:30 to 4. It started to come back off.
Yeah. So it was really late in the
and then it ended up finishing. Yeah.
And now it slammed through that. Now, there's some fundamental reasons why as well you'd be cautious around the miners, but nonetheless. So now what's happened is because it's broken that support level, it's telling us something different is in play. And we've got to be careful because this sideways channel is now broken. So the likelihood of further downward movement here is very, very high.
It's certainly higher than what it was. And the other thing to keep in mind is that you've got a lower peak now.
Mm-hmm.
You can see the lower peak there. And now you're guaranteed to have a lower trough. Right? We don't know when that trough's going to come in. It could fall another 3% before it goes back up.
That's right.
But always remember, and it's real again, the reason why trends are so important, if it's not immediately obvious already, is that when you see short-term bounces, you've got to remember that they're probably short-lived.
Correct.
Because the definition of a downtrend is lower peaks and lower troughs, and you can't make lower peaks unless you have short-term bounces, right?
Correct.
So it just means that you go, okay, well, I am seeing bullish momentum in this downtrending stock. I have to be really mindful for how the longevity of this run, right? Often, another name for them is dead caps, right? Because
So yesterday there was a bit of a bearish signal there, guys. The sellers were heavily in control, but it was way overdone, gapped. Okay, big movement, a little bit too big for my liking, so we left it alone. Our indicator also suggested a bit oversold. So the stars have to align, when we get into a trade. So we do all this analysis, support, resistance, uptrend, downtrend. The whole rules need to apply, and that's why indicators come into the situation. Comes into the decision making towards the end and things like that. But yesterday we didn't go short, and we spoke about going bearish or short this stock, but we decided not to because it's a bit oversold. And it was just gapped down way too much in one day. So
yeah, for sure. I mean, this could be a giant head and shoulders.
Yep. So you're head,
double top as
shoulder,
well. Yeah,
giant double top,
which does put it back down to that trend line.
Yeah,
and if you put it on a weekly chart, I bet you just where the moving averages come in as well.
Quite a bit.
So yeah, exactly. Which is pretty much where the 200-day comes in, or 200-week. So I have a feeling that I think you could see, is that $36? I'm pretty sure it is.
Yeah.
Yeah, $36 is the target for BHP. Might not get there, but there's a lot of things pointing to $36.
If nothing else changes out there fundamentally right now, guys would probably get down there.
I reckon it
my
will.
opinion.
There's a lot of reasons for it to get down there.
There was a massive shift in sentiment over the last month or so towards miners, and that was after the last Fed announcement. Everyone's fearful of recessions around the world. You got RBA lifting by 0.5%, and commodities now finally starting to smash lower.
Yep.
Your copper back down to the same levels trading early 2021. Right, that's almost 30. I think it was about 30% I measured. Copper fell 30% from its highs.
Yeah.
In about a 3-4 week period.
Yeah.
So that's one of the big reasons.
Look, this is a great opportunity because I can tell you right now, $36 for BHP is a great price. By any measure.
Long term, yeah.
It's good div, good yield. It's a great stock. It's not going anywhere. The Australian dollar is below 70 cents, which is great for our money. I mean, we're talking about fundamentals here, but I can tell you right now, BHP at those prices is just so cheap. And in recessions, because supply chains will be fixed, right? Obviously. In times of recessions, people use infrastructure building as a way to generate economic growth, which relies on metals.
Yeah.
So they might fall down. This might get to $36, but I think the recoveries, like it has in the past, will be actually V-shaped. And I think you'll get some great buying. You might need to wait for a month. Maybe you need to wait for 2 months. If recessions get really bad and supply chains don't fix whatever, it's hard to look that far into the future. But all things being equal, it is going to be honestly one of the best buys this year, I reckon.
Yeah, and we're big fans of the mining industry long term because especially anything to do with copper, minerals, BHP, I
mean, that's a good enough reason to be a fan of the miners, right?
And even though BHP's come from $16 back in 2016 and now sits 3 times that, was sitting almost 3 times that. It's still cheap at these levels, guys.
Yeah, it's cheap.
So, even if with commodities prices coming off a bit, it's still going to be sitting, 10, 12 type PEs, price to earnings.
I haven't checked, but,
so even if forward guidance gets pulled back a bit, they're still not going to be expensive at these levels. So,
and they got good divs, and people chase those divs. Australia is a div market, I feel, compared to other markets. Without getting into it, we've got an aging population. People want it for their supers because it pays an income.
Now, smart money, guys, they don't just buy because the stock's cheap, right? Smart money sits there and waits for the bottom, right? They wait for the right signals to suggest it's at the bottom, and then they start buying. Okay, so I'm not saying rush out there and buy now because it looks like it's cheaper than what it was 2 weeks ago. You've got to sit and wait for some clarity to hit the marketplace. So at the moment, the waters are definitely murky, right? Very, very muddy. We know that the Fed's going to lift rates again. RBA is going to keep lifting rates. We don't know how much commodities are going to keep falling.
We don't know what economic data looks like for the next 2 months.
Yeah. So there's a lot we don't know right now. We don't know how hard the central banks will go until they, how bad this recession is going to get before the central banks start, pedaling backwards again. And
we're in a new era of economics and stuff, and so this is why we like the short term because it makes life a lot easier, right? Tim and I could be singing a totally different tune in a month from now, right?
You could be singing a different tune in 2 days, right?
So because we'll have more evidence of things changing.
Yeah, right? We're traders, guys. Like we're gonna seriously, we've got our short term, medium, and long term views, and those views change. They're dynamic. We're going to keep moving as information comes in and changing positions, and that's what trading's all about, right? And that's why technical analysis is so important because markets can change on a dime, and you've got to be ready to do that as well. You don't want to be left behind, type thing. So
no, you don't. And again, having those rules-based approaches kind of helps when these things happen because when markets fear sell, as the key word there is fear, that obviously will flow into everyone. That's why markets move because someone's hitting the sell button. Having rules will help you manage that emotion so that you can analyze it again unbiasedly. And de-stressing is a good thing, right? At the end of the day, you want to make decisions logically, right?
So just a quick question up here from Alex. What is the difference between short and long-term trades? How long trade lasts? So basically, yeah. So look, I hold three sort of separate views at all times, right? Short, medium, and long term, right? For me, short term is literally day by day, week by week, right? And that's where I'm usually trading, Alex. Okay, is day by day, week by week. My longest trades might last a month, right? I don't tend to trade often much more than that. Okay. But I keep a medium to long term view of things as well, more from the investment point of view. Okay. And it also helps in my trading. So, as things, if my medium view is up, I'd probably want to favor upward trending sort of stocks and things like that. So if there's an overall uptrend in the market, obviously your trend's your friend, you want to follow your trend, right?
Yep.
But in the short term, I'm going to trade the movements within that trend. And sometimes that's going to be up or down, right? There's going to be periods of time where you're in a counter trend. So if the trend's up in a counter trend movement, you're going down. And I might actually trade that movement down, but it also says to me I should take some profit off the table, maybe in that sort of signal, and get back in closer to the trend, right? And that's all the opportunity. So,
it's not a simple answer, basically.
No.
And it kind of it's hard to isolate things into individual components, even though we try to. But what you're talking about, part of that is risk management, right, as well, which certainly plays a big part in that. Yeah, it's almost 2:00.
I think we better.
I've got two more slides that I'd like to run through.
In front of that.
One of them is about strategy, which we've already talked about a little bit. Yep, thank you. Just to kind of give you an idea, we've mentioned it a couple of times, but we like to trade warrants and options, which are derivatives. But you might be also interested in trading Forex or cryptos, right? I've got a brief description on there for the screen for you. These type of analysis will help you trade all of that, right? So you can apply what we teach to any market. It doesn't matter if it's local or overseas. It doesn't matter if it's a crypto market or a foreign exchange market. It doesn't matter if it's stock, right? We like to stick to things that are traded through the exchange, okay? For transparency reasons, for regulation reasons, for protection, all that type of stuff. And we like to trade locally with some US stuff, is right. And because of that, we trade things like mini warrants and options as a way to trade different market conditions. But we'll go through that a lot more next week.
Yeah, Friday next week, guys, jump on. We'll show you through some of these derivatives. So, we'll cover off, here's some technical reasons why we think the stock's going to move in a particular direction. And then here's a strategy with stops and everything and how we approach that side of it as well.
Yep. So just to kind of finish off, you probably, to be reductive and to boil things down simplistically, a lot of people are in their research phase, which is kind of that first circle. You're reading a book, you like that guy, I don't know what to do. The second step is to obviously learn and practice and run experiments, right? And then the third final step, hopefully, is to actually apply it and hopefully start working towards your goals, right? If you are interested in some education, we do run some courses, which I'm not going to go through now, right? But essentially, our approach is to give you a structured, practical approach to the market. We're not a university degree that focuses on theoreticals and focuses on all the minutia. We're just going to focus on the things that we think are going to help you make money, right? That includes going through direction picking, strategy, risk management, those core skills. And as you're learning them, and obviously a set of trading rules, right? If we haven't drilled that home enough yet. And to help basically you learn all that, we give you plenty of support. We have online support, we have face-to-face support, we give you your own personal trainer. And so a lot of it is about focused on mentorship, right? We want to be able to develop a one-on-one relationship with you, build a long-term relationship, and help you not only learn these things, but apply them in the live market. Speaking of which, I've already basically covered all that. Speaking of which, if you don't need any education, this kind of helps answer the first question from, I believe is it Dudley or something?
Yep.
My eyes are good, but not that good. In terms of, you're welcome to trade through us. So I mean, in fact, the majority of our time is spent helping people with their trade. So if you're out and about and you can't check on a trade, you can call us up and we can give you advice. Even if you're in front of your computer and you're thinking about, pulling the trigger and doing a trade, you can call up and check that trade with us first, right? To see, you're not making any silly mistakes or that you've thought of things, right? You can get our advice on direction, strategy, risk management, as well as any kind of positions that you're in, right? All of us have plenty of experience. I've been with the business for 10 years. I think Tim's been with the business for that plus a little bit longer. Sam, who is more of a fundamentals expert, he's been with the business for like 6 or 7 or 8 years or something. Everyone's been with the business for ages and we've all got plenty of experience. So if you'd like to lean on that experience, you're welcome to open up a trading account with us. We can give you some trade recommendations. We can give you some trade ideas and just help you manage your positions.
Yeah. Our full service is very, very different to your big trading houses like Comsex and things like that, right?
Where, vastly different. Yeah,
vastly different, guys. If you're doing a full service type trade and you want to give us a call, we'll sit on the phone and have a chat about the market with you for 5-10 minutes, whatever it is, and just run through things. Where most other sort of so-called full service is more so just taking your order and getting you into the market. They're not going to sit there and have a big conversation about your trading and things like that.
No, they don't really give you the time of day.
Yeah, we come from more of an education side, so we want to support people and help people
and improve what they're doing.
And
we can do that because we have that education background.
So we're a support company, basically, guys. We're not just a broking house like a lot of other places are. We're a support company that also allows people to trade with us.
Yeah, and I think just kind of getting back to the question, if you're in New Zealand, this is open to you as well. I couldn't recommend any brokers in New Zealand that are local to you, but we have New Zealand clients that trade through us.
Correct.
You can pick up the phone. International calls, I don't think are super expensive anymore. But if you don't want to do that, we also do things like Skype.
Yep.
I mean, obviously email, and there's ways to kind of get in touch. In terms of our education, we do education at a distance as well. Even though when we do live sessions, we can do them via live stream. So we do have clients in New Zealand. I think even from an account opening perspective, there's something special about New Zealand where you're kind of considered one of our states, right? I know, I'm just kidding, but it's not as if you're an American living in America, it's a lot harder to open up an account with us, whereas New Zealanders kind of get like a free pass for whatever reason. So hopefully that kind of answers your question. I know it's very self-serving, but it's
maybe give us a call at some point this afternoon,
or flick us an email. Yeah, you can talk to myself or Tim. Yeah. And again, just to drill it home, part 2 next week, next time on Trader Circle, 15th of July, 1 p.m. We're going to start applying everything that we've just run through in the live market. It's time to find some real trades, and we'll show you a few different strategies for different market conditions.
Yeah, we're going to show. I'll show you guys a sideways strategy, which is very, very unique to exchange traded options. And if you haven't seen options before, it's going to be very unique. It'll really open your eyes of what you can do in the marketplace. And not many Australians know about these strategies. They're huge in America. It's massive in America, guys. It's a bit smaller here in Australia, but they're creating awareness.
Yeah.
That's our mission at the moment.
Look, they got 320 million. We've got 20 million. So it's probably just as known here. It's just that by definition, it's like per capita, it's just a tiny amount of people. But we've been doing this 15 years. So we've been slowly educating people about it. And the strategies that we utilize on a fairly regular basis. So yeah. Anyway, guys, I think we're past that time. If you think of any questions after this webcast, you wake up in the middle of the night, just flick us an email or give us a call. Don't call us in the middle of the night, but during the day.
You can give Karo a call in the middle of the night.
Yeah, do that. I'm usually up anyway. All right. Thanks very much, guys.
Thanks, everyone. Thanks for listening. Take care.